Assalamualaikum warahmatullahi wabarakatuh. Today our group will be presenting a strategic management review of Petronas. This presentation is part of our MGT 659 course, Concept and Application of Strategic Management. We have conducted an in-depth analysis of Petronas' background, its market position, and its future strategic direction. My group members consist of which is myself, Muhammad Naim Wijdan bin Afif, Muhammad Imran Aulia, Muhammad Takif, Muhammad Hakim Fariduddin, and Muhammad Nur Arif Amar. Okay, let's dive into the history. Petronas was established in 1974 under the Petroleum Development Act. It was created with a clear mandate to control and protect Malaysia's petroleum resources. Today, it is a fully government-owned organization that plays a dual role. It operates as a commercial multinational energy company while simultaneously serving as a custodian of Malaysia's national energy security. Its reach is truly global, operating over 100 countries. Petronas is currently undergoing a strategic shift, moving beyond traditional oil and gas to prioritize low-carbon solutions, renewable energy, and aggressive digitalization. Next, vision and mission. To guide this shift, Petronas follows a future-forward vision. To be a major world energy and solution provider, they aim to balance efficiency with environmental accountability. Their mission is three-pronged. First, operational excellence, maximizing performance across the entire value chain, upstream, midstream, and downstream. Second, sustainability, transitioning to low-carbon technologies and cleaner fuels. Third, human capital. This is vital. They are focused on growing the agility of their workforce to stay competitive in a fast-evolving global market. Next, organizational culture and governance. A company of this size requires a robust culture. Petronas utilize a streamlined hierarchy to ensure they remain agile. Unlike many traditional firms, they emphasize leadership accessibility and empowerment at various levels. A key feature of their governance is decentralized decision making. By pushing authority down to business segment and project team, they can respond more quickly to the market fluctuation without being bogged down by central bureaucracy. Next, strategic goals and objectives. What is Petronas trying to achieve in the long term? Their strategy is built on four pillars. First, operational excellence. This is about the efficiency and cost leadership. Second, a firm sustainability commitment, which is now at the core of their brand. Third, global diversification to reduce dependence on domestic resources and explore new international markets. Finally, innovation through technology to lead the energy transition. Next, we continue to the company logo. The Petronas identity is encapsulated in its logo. The emerald green drop represent dynamism, unity, and the continuous flow of energy. While the design have evolved since 1974, it consistently reflects the company's roots in oil and gas while symbolizing a commitment to progress national pride. Next, we move to the board of directors. The board of directors act as the company strategic architect led by the chairman Tan Sri Datuk Sri Muhammad Baki Saleh. They are responsible for long-term vision and ethical leadership. One of their most critical functions is implementing capital discipline. In 2024, they managed to expenditure of 54.2 billion ringgit, carefully balancing traditional operation with investment in new energy venture like Gentari. Additionally, Petronas remained a major contributor to nation, providing 32 billion ringgit dividend in 2024 to support the Malaysian economy. Finally, let's look at the competitive landscapes. Petronas operate in a market dominated by massive global players. Our analysis identifies two primary competitors, which is Shell and Petronas. Shell is a global giant operating in over 70 countries and leading the market with approximately 79% share in 2024. Petronas hold a strong second position with an 18% market share. Petron occupies the 3% of the market, while Shell remains the dominant leader. Petronas' 18% share represents a significant global footprint, especially considering its dual role as a national oil company. This competition drives Petronas to continuously innovate and diversify its offering. This concludes our look at the company background. We will now move into the detailed company review. I will pass to the next presenter.
Assalamualaikum everyone. My name is Muhammad Takif and it is a pleasure to be here today. My part is to presenting a comprehensive review of the strategic position of Petronas, specifically focusing on the critical evaluations outlined in Chapter 2 of Analysis. Our objective is to provide a clear picture of where the company stands today. To do this, we will dive into three main areas. First, we will examine the internal capabilities that define the foundation. Second, we will analyze how Petronas interacts with and responds to the broader global market. And finally, we will address the specific high-stakes challenges the company faces within an increasingly volatile energy landscape. By the end of this presentation, you will have a deep understanding of Petronas' current strategic health and its readiness for the future. Our analysis begins with a SWOT overview. Petronas benefits from a highly stable foundation, thanks to the state ownership and strong cash flows. However, this stability is balanced against a heavy dependence on oil and gas, a sector facing massive changes. While opportunities like the growing demand for natural gas and digital transformation are within reach, we must stay alert to intense competition and tightening environmental regulations. We evaluate the internal engines that drive Petronas' success. First and foremost is our customer relationship management. By consistently delivering reliable products and services, particularly within the domestic retail fuel segment, we have built a substantial and loyal customer base. Supporting this is our deep pool of expertise. Through long-term investment in human capital and industry-specific training, Petronas has developed technical and managerial capabilities that are essential for operational excellence. Financially, the company possesses immense financial power, characterized by strong free cash flow. This liquidity is vital as it allows us to reinvest in capital-intensive projects and strategic expansion without solely relying on external debt. Finally, our government backing cannot be overstated. As a state-owned entity, we benefit from institutional stability, policy alignment, and enhanced credibility, which provides a resilient foundation even during periods of global market volatility. We must address the internal challenges. The primary concern is concentration risk. Petronas remains highly dependent on oil and gas activities, which leaves their revenue vulnerable to commodity price volatility and the ongoing global energy transition. Closely linked to the size is organizational rigidity. Petronas' large structure and multiple management layers often result in rigid decision-making, which can slow down response to rapid market changes. They also face issues with capital intensity. The massive financial commitment required for their large-scale projects can limit financial flexibility, especially during economic downturns. Lastly, there is the issue of global reach. While they have an international presence, Petronas still face limitations in expanding market share against established global supermajors, which impacts overall global competitiveness. We look at the external landscape and the opportunities Petronas is poised to capture. The global shift towards cleaner energy has created a massive opening for natural gas. As countries transition away from coal, the demand for LNG is growing, providing a clear path to strengthen international operations. Simultaneously, the digitalization trend allows to enhance customer engagement through cashless platforms and improve transaction efficiency. Petronas are also seeing significant market shifts. Consumer preferences are moving toward convenience and integrated services, allowing Petronas to modernize its retail offerings. Furthermore, general technological advancements provides the tools necessary to optimize upstream and downstream operations, ensuring remain cost-effective and innovative in a digital-first economy. Finally, this slide outlines the external threats that could impact progress. Competitive pressure remains intense with global energy players exerting pricing pressure and competing for market share. Internally, operational costs are threatened by rising labor costs and higher wages, which can erode cost competitiveness. From a regulatory standpoint, sustainability is the most pressing challenge. Stricter environmental regulations and decarbonization pressures required to adapt traditional oil and gas activities, often at a high compliance cost. Compounding this is resource decline, specifically the declining domestic production of oil and gas, which threatens the long-term sustainability of local supply chain. To quantify these internal factors, we utilize the Internal Factor Evaluation or IFE matrix. Petronas received a total weighted score of 2.50. This score indicates an average internal position. While strengths in supplier reliability and customer satisfactions are high, earning weighted scores of 0.40 each, they are currently being offset by the weight of structural weaknesses, particularly reliance on volatile commodity prices and the slow pace of internal management layers. Moving to the external environment, the EFE matrix shows a more positive outlook with a score of 2.90. This tells us that Petronas is above average in responding to external opportunities. The highest growth drivers identified are the rising global demand for natural gas and favorable fuel prices, both contributing significantly to external score. However, we must continuously navigate the threats of intense global competition and the increasing pressure from environmental regulations and decarbonization initiatives that could raise future operating costs. Now, let's focus on the competitive profile matrix, CPM, which is one of the most critical parts of our strategic benchmarking. In this matrix, Petronas achieved a total score of 3.15, placing it ahead of Shell at 2.50 and Petron at 2.20. But we must look beyond just the final numbers to understand why these competitors were chosen as our primary standards. The choice of Shell and Petron as our main standards is a deliberate strategic decision. Shell was selected because it represents the global gold standard in integrated energy, with a massive global revenue presence of nearly 80%. By comparing Petronas to a global supermajor like Shell, we can clearly identify the gap need to close to become more globally competent, specifically in areas of technological innovation and international market penetration. Petron was chosen to provide a balanced regional perspective. As a leading refiner in Southeast Asia and a growing force in Malaysian retail market, Petron is direct competitor for consumer loyalty and retail efficiency. This comparison allows us to see how a state-owned entity like Petronas competes against the agility and speed of private sector players like Petron and Shell. Moving to achievements, Petronas has reached several critical milestones that prove strategy effectiveness. First, Petronas' financial health is exceptionally strong. In 2022, they achieved a record profit after tax of 101.6 billion ringgit. This stability allows us to support Malaysia's economy and allow Petronas to reinvest in future. In 2023, they secured long-term supply by discovering over 1 billion barrels of oil equivalent across 19 projects. They have also successfully pivoted into a global powerhouse, with 74% of revenue now coming from international markets, which significantly reduces local market dependence. Beyond profits, they are serious about the environment. Petronas have successfully kept greenhouse gas emission below 49.5 million tons carbon dioxide as they track toward net zero 2050 goal. These efforts have not gone unnoticed, as Petronas was recently honored as both the National Oil Company and Energy Transition Company of the Year on the global stage. To conclude our Chapter 2 analysis, we must address 5 critical problems that challenge Petronas' long-term leadership. First is heavy dependence on oil and gas revenue. Petronas' reliance on fossil fuels exposes to global price volatility and geopolitical tensions, which can suddenly restrict cash flow and investment capacity. Second, high capital investment requirements for massive projects limit financial flexibility, especially during economic downturns. Third, rigid decision-making and a complex structure can slow response to rapid market changes and emerging technologies. Fourth, they face limited international market share in regions dominated by global supermajors, restricting economies of scale. Finally, decarbonization pressure and stricter environmental regulations are raising compliance costs and constraining traditional operations. Solving these issues is a strategic necessity to Petronas toward world-class agility. As the conclusion of Chapter 2, Petronas has proven to be a resilient energy giant with an incredibly strong financial backbone, evidenced by record profits and successful resource discoveries. However, our analysis show that staying at the top requires more than just financial stability. To remain competitive against global supermajors like Shell and agile regional players like Petronas must consolidate strategies in three key areas. First, they must improve decision-making speed by addressing the rigidities that currently slow them down. Second, they need to aggressively expand international footprint to secure a larger portion of a global market share. And finally, they must accelerate their transition to sustainable energy to meet net zero 2050 commitments. By focusing on these priorities, Petronas will not only maintain its territory but also thrive as a globally competent energy leader.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Imran Aulia bin Muhammad Fabila. And now, I'll be moving on to Chapter 3. This section discusses Petronas strategic planning processes. To ensure that the strategies are well structured and objective, Petronas applies several strategic management tools, namely the internal external metrics, the BCG matrix, SWOT analysis, and the quantitative strategic planning matrix. These tools helps the company to analyze its internal capabilities, assesses the external environment, and evaluate the most suitable strategic alternative. Next, as we can see on the above table, based on the internal external matrix analysis, Petronas is positioned in cell 5, which represent the whole and maintain strategy. This position indicates that Petronas has moderate internal strength while operating in a relatively favorable external environment. This means that although Petronas has strong capabilities, it also faces limitations such as operational complexity and dependence on oil and gas. Therefore, rather than pursuing aggressive expansion, Petronas should prioritize strengthening efficiency, improving existing operation, and optimizing current resources. This approach allows the company to remain competitive while managing risks and ensuring long-term sustainability. Next, the BCG matrix is used to evaluate Petronas business portfolio based on market growth and market share. The LNG segment is classified as a star because it has a strong market share and continue to experience high global demand, making it a key driver of a future growth. Domestic retail, fuel or operational are categorized as cash cows as they generate a stable and consistent cash flow despite a limited growth. Renewable and low carbon energy initiatives fall under question mark due to their high growth potential but currently low market share, requiring a further investment and strategic focus. Lastly, mature oil fields are considered dog because of declining production and lower profitability, indicating that need for careful management or gradual divestment. Based on the outcome of the IE matrix and BCG matrix analysis, several strategic alternatives were identified for Petronas. These include forward integration, backward integration, market penetration, market development, and product development. each alternative offers a different strategic benefits. Integration strategies focus on strengthening control over the value chain, while market and product strategies aim to expand revenue sources and reduce this dependency on traditional oil and gas operation. These alternatives were then evaluated further to determine which strategies best align with Petronas resources, risk and long-term objective. After carefully evaluating all strategic alternatives, Petronas selected three main strategies, which are backward integration, forward integration, and market penetration. These strategies were chosen because they are aligned closely with Petronas' strength, financial capacity, and long-term objective. Backward integration allows Petronas to strengthen control over upstream activities and reduce dependency on external suppliers. Meanwhile, for forward integration, enhance the efficiency across distribution and retail channel, while market penetration focus on increasing sale within existing market. Together, these strategies support to operational efficiency, revenue stability, and competitive advantage. On the last slide of Chapter 3, to finalize the strategy selection, the quantitative strategic planning matrix was applied to objectively compare the attractiveness of each strategy. The result indicate that backward integration achieved the highest total attractiveness score, followed by forward integration and market penetration. These outcomes suggest that strategies which strengthen Petronas' control over its value chain are more suitable given its current position. The QSPM confirmed that backward integration should be prioritized, while the other strategies play supporting role in achieving Petronas' strategic goals. And now, I will pass to the next presenter.
Assalamualaikum everyone, my name is Mama Hakim and today we'll be discussing the strategic implementation of Petronas, which is new initiative aimed at strengthening its market positions and ensuring long-term competitiveness. As we move forward, we will focus on three key strategies: backward integration, forward integration, and market penetrations. These strategies are tailored to address both current challenges and future opportunities, ensuring that Petronas remains a global energy leader while transitioning towards more sustainable practices. Let's dive into how each strategy will be implemented. So we move to our first strategy, which is backward integration. It is focused on enhancing Petronas' control over its upstream operations, such as explorations, production, and access to essential oil and gas resources. This approach ensures greater energy security and stability in operations. So to implement this strategy, Petronas will strengthen ownership of upstream assets and invest in technologies like enhanced oil recovery (EOR) to extend the life of mature oil fields. International expansion is also the key, and strategic partnerships with other national oil companies will help minimize the risks while accessing new reserves. So the benefits of backward integration include improved cost stability and financial predictability, enabling the company to reinvest in future growth areas like renewable energy. However, challenges include the significant capital outlay required and technical risks associated with upstream operation, as well as potential impacts on organizational flexibility. Now, I will explain the second strategy, which is forward integration. It aims to enhance Petronas' presence in downstream operations, particularly through its retail network. By increasing control over distribution, retail operations, and customer interactions, Petronas can capture greater margins and reinforce brand loyalty. So, to implement this strategy, Petronas will expand both its domestic and international retail networks, focusing on upgrading fuel stations and integrating lifestyle solutions such as convenience store, food joints, and electric vehicle charging stations. Additionally, leveraging digital platforms like the Settle and Mesra loyalty program will help improve customer engagements. So the advantage of forward integration include enhanced control over pricing, better service quality, and stronger customer relationship. However, it also comes with challenges like high capital costs for infrastructure expansion and intense competition at the retail level. Now we move to the last last strategy, which is market penetration. It focuses on increasing Petronas' market share in its existing markets, particularly in retail fuel. This strategy aims to maximize sales volume by optimizing existing services and engaging customers more effectively. So, to implement this strategy, Petronas will focus on improving service efficiency at retail stations, enhancing customer satisfaction, and increasing frequency of visits. Digital tools like the Settle app will enable data-driven marketing, offering personalized promotion to boost sales. So the benefit of market penetration include quicker revenue generation with lower risk, as it builds on Petronas' existing infrastructure and brand. However, the strategy faces challenges such as potential market saturations and reliance on promotion and discounts, which could negatively impact and profitability. In conclusion, the strategies outlined today, which is backward integration, forward integration, and market penetration, work together to strengthen Petronas' competitive position. By focusing on consolidating current operations and gradually expanding into new growth areas, Petronas can achieve both short-term revenue generation and long-term sustainability. So, backward integration helps secure upstream resources and energy security, while forward integration enhances downstream control and customer engagement. Market penetration will maximize Petronas' market share in existing segments, ensuring steady cash flow. Together, these strategies position Petronas to meet the challenges of the evolving global energy landscape, while continuing to drive financial and operational excellence. Thank you for your attention, and that's all from me. I will pass to the next presenter.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Nur Arif Amal. Okay, next, we move to the next chapter, which is chapter 5. This chapter presents the conclusion and recommendation of our strategy analysis on Petronas. It summarizes the strategic roadmap through backward integration, forward integration, and also the market penetration. The strategic impact of these strategies is a balanced approach that strengthens energy security, enhances customer centricity, and support financial growth. The revised strategic position shows that Petronas is strengthening its internal and external readiness while remaining within its current strategic position. Lastly, this chapter reflects on the use of structured strategic tools such as IFE, EFE, IE matrix, CPM, and QSPM to support long-term sustainability in a transition-driven global energy market. The expectation of the new strategies focus on achieving both growth and stability. Backward integration aims to strengthen Petronas' control over upstream assets, enhancing energy security while reducing reliance on third-party suppliers and mitigating geopolitical and supply shock risks. Forward integration focus on improving downstreams and retail efficiency through digital platform and enhanced customer touchpoints. This leads to higher customer satisfaction, stronger brand equity, and better control over profit margins. Market penetration targets revenue growth in existing markets through targeted marketing, improved service quality, and customer engagement. This helps Petronas strengthen leaderships in the local fuel retail market and generate stable cash flow. Overall, these strategies provide strategic balance by combining long-term resilience from upstream integration with short-term financial performance from downstream and market focus in activity initiatives. Next, we move to the revised IFE, EFE, and IE metrics. The revised internal factor evaluation IFE shows that Petronas has strengthened its internal capabilities, particularly in financial stability and operational agility. The revised EFE indicates that Petronas is better equipped to respond to oil price volatility, regulatory changes, and the global energy transitions. Based on these revisions, Petronas remains in the hold and maintain quadrant of the IE matrix. This confirms that the company should focus on consolidation, efficiency improvement, and controlled growth rather than aggressive expansion. To ensure successful implementation, strategic evaluation and control are essential. Backward integration is evaluated using indicators such as production efficiency, reserve replacement ratio, and cost stability. Forward integration performance is monitored through retail performance digital platforms such as Settle and customer loyalty. Market penetration is assessed based on sales growth, market share, and promotional effectiveness. A continuous feedback system allows management to take corrective actions and ensure strategies remain aligned with organizational goals. And for reflection and final conclusion, this strategic studies demonstrates the importance of applying structured strategic tools such as IFE, EFE, IE matrix, CPM, and also QSPM. A key takeaway is the need to balance short-term cash flow and market strengths with long-term resilience, sustainability, and also the readiness for energy transition. In conclusion, the chosen strategies are appropriate for the current energy environment, feasible using Petronas' existing capabilities, and aligned with its mission to be progressive energy and solutions partner. That's all from us. Thank you. Assalamualaikum.